Hey, welcome back, everybody. In this episode, we'll map out the U.S. capital markets regulatory landscape. From federal statutes to self-regulators, fiscal agencies, state regulators, and monetary authorities, to show how they interlock in governing, trading, underwriting, and disclosure. We start with the SEC. These guys were created by the Securities Exchange Act of 1934 to register and oversee broker-dealers and exchanges. Then we're going to move on to the self-regulatory organizations, the SROs like FINRA, CBOE, and MSRB. These guys, they implement the SEC rules. And next after that, we're going to touch up on the Department of the Treasury's role in revenue collection and policy, as well as the U.S. Department of the Treasury and the IRS's enforcement of tax laws. We'll then zoom in on NASAA, the Voluntary Association of State Securities Administrators. NASAA. Not NASA that makes our spaceships. Yeah, finding out that these guys have the same name as NASA, the space company, had me over a loop as well. But yeah, and then we're going to finish off with the Federal Reserve's monetary policy mandate across the 12 regional banks. By highlighting each of these bodies' authority, mission, and interplay, I'm hoping to give you guys a exam-relevant why behind the rules and practices that we have to follow and abide by. To start off with, we have the main regulatory body, the SEC. And yeah, these guys, they were created by the Securities Exchange Act of 1934, a big stepping stone for the exchanges. And this Act of 1934, what it did is it established the SEC and empowered it to register, regulate, and oversee brokerage firms, clearing agencies, and the SROs like FINRA and the other exchange bodies. And the mission is protect investors, maintain fair, orderly, and efficient markets while facilitating capital formation, right? Making sure the markets are fair and that the retail investors are protected, and that there is no nefarious individuals taking advantage of people. Another one of these core functions are broker-dealer registration. Firms and individuals, they must file a Form BD via FINRA, the CRD, to conduct securities business with the general public. Now, remember that Form BD. They must fill that out and file it with FINRA to conduct any securities business with the general public. And the scope of the SEC is they regulate all national securities exchanges and trading venues, but they do not pre-approve any of these securities. They don't pre-approve the accuracy of every broker-dealer statement or offering prospectus. I remember that's a key point. Whenever you're reading off a prospectus for a security, you'll find some statement in the form of, now these contents have not been approved nor disapproved by the SEC. Now, to simplify the role of the SEC and the scope of our exams here, they write the high-level rules, and the SROs, they put these rules into practice. Now that we know what the SEC does, let's see how the self-regulatory organizations operate under its umbrella. All right, moving on. One of the first SROs we should look at is FINRA. They're the ones writing these exams for you guys, and they regulate broker-dealers, underwriters who underwrite public offerings. They also oversee over-the-counter trading and the trading of NYSE listed securities, right? The New York Stock Exchange listed securities, while enforcing conduct standards, compliance. All that is FINRA. And FINRA's mission here in all this is to protect investors and safeguard market integrity through rule writing, examinations, dispute resolution and enforcement. Now, FINRA isn't just another acronym. It's the Financial Industry Regulatory Authority, and it's the backbone of broker-dealer oversight, as we discussed. And on the SIE in the Series 7, you need to recognize that a lot of these questions are going to have to do with things within the scope of FINRA's world, right? So it's going to have to do with rules and procedures that they've created, such as the communications with public, the Rule 2210, that is what's allowed in marketing materials and social media, for instance, right? And then Rule 4511, which is how long firms must retain trade tickets and any client correspondence, right? Even in internal communication. There's going to be margin requirements, which is Reg T, FINRA Rule 4210. You're going to have to know initial deposits, maintenance calls, and how they differ from long versions and short positions, etc. There's going to be net capital, which is the formulas that firms use to prove that they can meet an obligation. And then you're going to even have the continuing education. Yes, you're not going to be done with these guys, not even after the Series 7, because you are going to have continuing education that is created and enforced by FINRA, right? And this is going to be a regulatory element, which is after your qualification. And there's going to be a firm element as well, which your firm is going to require their own internal continuing education on firm-specific topics. Every exam item on customer protection, trade reporting, or advertising compliance traces back to a specific FINRA rule. No need to memorize the rule numbers, but please try to remember the core ones and their principles and purpose. And trust me, you're going to nail both the SIE's broad concepts and the Series 7's nuanced questions. Moving on to the second most important self-regulator, the CBOE, Chicago Board Options Exchange. These guys, they list and regulate standardized equity and index options. They mandate the contract terms, your strike price, your spread, and they work with the OCC, which is the Options Clearing Corporation, for clearing of their securities, which are option contracts. And finally, we're going to have the MSRB, the final self-regulator on our list of important ones for our exam. And the MSRB, they are the Municipal Security Rule-Making Board. And these guys, they create rules for underwriting, trading, and fair dealing within the municipal securities offerings. But remember, the key with the MSRB is that while they create rules, they're more creating guidelines to follow, but they do not enforce directly. That's going to be a key point for the exam. The MSRB, they do not enforce any of their rules. They go through the other SROs, such as FINRA or even the Fed or OCC, to enforce their rules. So finally, while the SROs are self-regulators, translate rules and SEC statutes into day-to-day rules and compliance requirements for market participants, there are bigger players that impact the capital markets, big players such as the federal departments. And these guys, they set the fiscal policy and tax policy that impact us greatly. To start off with, we're going to have the Department of the Treasury. Their role is they manage federal finances, collecting taxes, duties, and public debt, while also manufacturing currency and advising on fiscal policy. It's headed by the Secretary of the Treasury, who serves on the National Economic Council and oversees bureaus that are important to our exam, such as the IRS, OCC, and FinCEN. What's going to be important about the Treasury for our exams is that their fiscal policies and debt management underpin market liquidity and government securities issuance. Next on our list, we're going to have the IRS, and These guys, they enforce the tax laws that fund federal spending and influence investor returns greatly. The Internal Revenue Service, the IRS, they have a sort of a statutory authority, which is being able to administer and enforce the Internal Revenue Code, overseeing individual and corporate tax compliance. Everybody falls underneath this umbrella, right? You're going to be either an individual or a corporate in the eyes of the IRS. And their enforcement level, well, they can utilize notices, levies, and penalties to ensure on-time payments and making sure that you pay at the end of the day. And this is all to support fair tax collection, quote, quote. Tax treatment is going to affect the corporate profits, bond yields, and investor behavior greatly. Now, while we won't get too many questions on these departments and the IRS, well, the rules, they're pretty much built around the Internal Revenue Code and just the IRS's authority in general. So it's always important to know, if you haven't already, a solid understanding of these guys. Moving on, we're going to have the NASAA, and it stands for the North American Securities Administrators Association. Now, NASAA's role is that they create a guideline of rules that the states can follow, right? They can pretty much pick and choose from the set of guidelines on what they want to implement within their confines of their own state. And while they may be voluntary, its influence, it's going to show up on your exam. On the SIE, for instance, you're going to have to know that NASAA is the entity behind the Blue Sky rules that require agent and broker-dealer registration locally. You're going to need to know state registration versus federal covered securities, state exemptions and notice filings, how an offering like a registered investment company may bypass Blue Sky registration, or when a notice filing suffices. There's going to be a agent versus broker-dealer registrations, the timing, fees, and renewal schedules for both of those groups, agent versus broker-dealer. You're going to have to know record-keeping requirements, which are NASAA's recommendations on client records that FINRA then enforces. Because remember, NASA is not able to enforce their own policies. So understanding NASAA's role is going to help you connect the dots within SEC writing the law and NASAA ensuring that each state protects its investors and, making these guidelines that the states can abide by while not subterfuging any of the already created Fed laws. Because remember, they're not able to overwrite the Fed laws. They're only able to complement the Fed laws. And then FINRA finally enforces compliance across both. So this is going to be a three-legged stool that the exam is going to love to try to pick you guys on. But we will make sure to create another video that's going to cover all this in deeper discussion. Stepping away from NASA, I did want to touch on the Federal Reserve Board, our final department of the government. So the FRB, the Federal Reserve Board, their structure is they're a 7-member board of governors plus 12 regional Federal Reserve banks operating across U.S. districts. And what they do is that they act as the U.S. Treasury's agent. They're agent in the sense that they regulate the money supply, they set margin requirements, supervise the member banks, and conduct open market operations to influence the interest rates. These guys, they're the long arm of the Federal Reserve Board, but not the long arm of the law. They're the long arm of operations, essentially, right? So the U.S. Treasury sends these guys to conduct their business, essentially. They're a powerful force because the Fed rate decisions, they directly impact bond yields, equity valuation, and margin costs. So all three of those being core exam topics and capital market questions, especially in the Series 7 exam. Well, all right. Just wanted to wrap it up here. So to tie it all together, some of the important points I want to leave you guys with, there are the SEC statutes, which translates towards allowing the SRO to create rules. And what I mean by this is that the Securities Exchange Act, it lays down the federal law, right? And from this law, the self-regulatory organizations like FINRA, CBOE, and MSRB, they then translate those statutes into detailed rules, exams, and enforcement policies that you're going to apply every day. Second, the Treasury borrowing and Fed policy. These mess with the market conditions. The U.S. Treasury's debt issuance funds government operations and supplies a massive bond market. And with this, it's a double-edged sword at the same time, because the Federal Reserve's interest rate decisions and open market operations, they influence the very same yields that the Treasury Department issues. And this shapes everything from corporate borrowing costs to stock valuations. Finally, the state laws, NASAA, this is going to be very important. Blue sky laws are meant to augment federal oversight. They've been crafted by NASAA, whose members consist of the many states' governors, and they require agent and broker-dealer registrations at the state level while filling in gaps left by the federal rules. Remember, not overriding any of the federal rules, but only filling in potential gaps left by them, right? Potential items that they may have not touched or clarified enough on. Well, guys, master this, and you're going to have clarity on how to handle any question on market structure and regulation that comes your way. Thanks for watching, and I'll see you on episode 3.